If you're 65 or older, there's a real chance that money is leaving your account right now for a bill you're legally not required to pay. Not a discount, not a special deal, an actual mandatory charge you have every right to stop. And most people your age are still paying it anyway, month after month, year after year, without question. This video is for you if you receive Social Security, if you're on Medicare, if you own your home, or if you file a tax return every spring out of sheer habit. There are 5 of these, 5 separate bills that a massive number of older Americans are either legally exempt from or can have eliminated entirely. The rules are real. They're on the books right now in 2026. And here's what should genuinely make you angry. Nobody is going to come and tell you. No letter shows up in the mail. The money just keeps walking out the door because the entire system is designed so that you have to ask first. I'll be straight with you from the start. Some of these are automatic. Most of them are not. And that gap is worth thousands of dollars. Near the end, I'll walk you through one document, one single page that costs you nothing, that eliminates a charge most people assume is permanent. Almost nobody files it. Stay with me, because that's the one I'd want my own father to hear about. One thing before the list. The rules around senior benefits shift constantly, and when they do, no agency picks up the phone to warn you. The people who find out early keep their money. Everyone else discovers it months later, after the window has closed and the funds are already gone. If you want to be in that first group, hit subscribe. That's the entire reason this channel exists, to get this in front of you before it costs you something. The tax on your Social Security you may not owe. A large number of retirees have federal income tax withheld directly from their Social Security payments every single month, and a significant portion of them don't owe a single cent of it. Here's how the mechanism works. The IRS calculates what they call your combined income, your benefit amount, plus any other income you bring in. If you're single, and that total falls below $25,000 a year, your Social Security is not subject to federal tax, not at all. For married couples filing jointly, the threshold is $32,000. Come in under that, and you owe 0 federal tax on those benefits. So who's still paying? People who live primarily on Social Security and a modest pension, who turned on tax withholding years ago and never turned it back off. They filled out a form once, checked a box, forgot about it. The money has been leaving ever since. And here's what genuinely bothers me. Those 2 thresholds, $25,000 and $32,000, were written into law between 1983 and 1994 and have never been adjusted once. 40 years, frozen solid. That's not an oversight. It's precisely why more seniors get pulled into the taxable range every single year while the dollar keeps shrinking around them. What do? Pull out your most recent tax return or call the office that manages your benefits and ask one direct question. Is federal tax being withheld from my Social Security? And given my income, do I actually owe it? If the answer is no, you stop the withholding. That's it. Money starts coming back to you every month. The new deduction that expires in 2028. This one is brand new. It's the largest tax break aimed specifically at older Americans in years, and it runs only through 2028. That makes it urgent, not eventually, right now. It's called the Senior Deduction, and it came out of the sweeping tax legislation signed into law in 2025. If you turn 65 by the last day of the tax year, you can reduce your taxable income by an additional $6,000 on top of your regular standard deduction. On top of the existing age add-on for people over 65, they all stack together. Now, the next part is only for married couples where both spouses are 65 or older, so lean in, because the number doubles. It's not one deduction split between 2 people. Each of you gets your own. That's $12,000 off your combined taxable income simply for being a retired couple over 65. Let's put real numbers on it. On the return you're filing this year, a single person over 65 takes the standard deduction of roughly $15,750, adds the $2,000 age amount, then adds this new $6,000. That's north of $23,000 in deductions before a single dollar of tax gets calculated. For many retirees, that brings the bill down to nothing. There is a limit, and I won't hide it. The benefit starts phasing out as income rises for single filers above $75,000, for couples above $150,000. Beyond that, it gradually disappears. But the overwhelming majority of retirees fall well within that range. This was built for middle-income seniors, and most seniors are exactly that. You can claim it regardless of whether you itemize or take the standard deduction. The attached form is Schedule 1A. If someone else prepares your taxes, say this to them out loud. Did you apply the new senior deduction for me? The $6,000 or $12,000 if we both qualify? Make them give you a clear answer. People have already filed and walked right past it. The Medicare Part B premium you may not have to pay. If you're on Medicare, a premium for Part B is deducted from your check every month. In 2026, that's $202.90, typically pulled straight out of your Social Security before you ever see it. Most people treat it as an unavoidable cost of being on Medicare. For millions of retirees, it isn't. They qualify to have that premium covered in full, and they're handing over $200 a month anyway. The help is called Medicare Savings Programs. There are 3 of them, each known by an abbreviation: QMB, SLMB, and QI. The first 2 cover the Part B premium completely. QMB goes even further. It also picks up your deductibles and copays. Here's roughly where the income lines fall in most states this year. Single individuals with monthly income under approximately $1,350 or couples under about $1,824 are in range for the strongest program. The cutoffs are higher for the other 2, so even if those first numbers seem low, you may still qualify. And several states don't even count your savings when making that determination. Let me tell you about a real situation. I'll call her Valeria. 71 years old, living outside Chicago on her late husband's Social Security and a small employer pension. For 3.5 years, $202 left her check every month for Part B. She assumed it was required. A counselor at a local community center spent about 15 minutes reviewing her numbers and discovered that Valeria had qualified for QMB the entire time. More than $8,000. Gone, and she's not getting it back. The only thing standing between her and that money was a question nobody ever thought to ask her. And that's the painful part. An estimated 1 in 4 older Americans who qualify for these programs is not enrolled, not because they were turned down, but because they never knew to ask, and no one ever offered. It doesn't stop at the premium either. If your income is low enough for one of these programs, you most likely also qualify for help with prescription drug costs. In 2026, that caps your out-of-pocket payment for a covered medication at $12.65, regardless of what the drug actually costs. Here's exactly what to do. Call Medicare directly at 1-800-633-4227 or contact your state Medicaid office and say these words: "I'd like to apply for a Medicare Savings Program. I believe I qualify to have my Part B premium covered." Those words start the process. Write them down before you close this video. The property tax break your state offers but won't hand you. This one applies to you even if your home is fully paid off. Property taxes. Every state in the country offers some form of property tax relief for homeowners age 65 and older. Some reduce the assessed value of your home. Others freeze it at the moment you qualify, so your bill stops climbing while your neighbor's keeps going up. Others cap what you owe as a percentage of your income. In Texas, seniors receive an additional exemption plus a freeze on the school tax portion, the heaviest component of most property tax bills. In Florida, long-term residents over 65 can receive a $50,000 reduction in assessed value, and in certain counties the bill disappears entirely. New York recently granted municipalities the authority to reduce the taxable value of a senior homeowner's property by up to 65%. This matters most for people who have lived in the same house for 20 or 30 years and watched their tax bill triple while their income stayed flat. A freeze is the most valuable tool for that situation. It locks in the part that keeps growing. But here's that same frustrating pattern again. None of this is automatic. Your county assessor already knows how old you are. They will not reach out to you. You have to file the application yourself, typically early in the year, and in most places, if you miss that window, you lose the benefit for the entire year with no opportunity to recover it. Even if your income runs slightly above the threshold for an exemption, ask specifically about a freeze or a deferral program, because some of those have no income cap at all. Hundreds, sometimes thousands of dollars disappear every year simply because people are sitting around waiting for a letter that is never going to come. Call your county assessor's office or go to their website today and ask directly, what senior exemptions, freezes, or credits am I eligible for? And what is the application deadline? Then write that date on your calendar. Don't trust your memory with this one. The system is counting on exactly that. The IRMAA Surcharge and Form SSA 44. This is the form I promised you at the very beginning. Some retirees don't pay the standard Medicare premium, they pay a higher one. It's an income-based surcharge called IRMAA, and it kicks in when annual income exceeds $109,000 for a single filer or $218,000 for a couple. Here's the trap. Medicare doesn't look at your current income to set that surcharge. It reaches back 2 years. Your 2026 surcharge is based on your 2024 tax return. This is critical for anyone who had an unusual income year in 2024. You sold a home, withdrew a portion of a retirement account, received a one-time payout, or lost a spouse and the financial picture shifted entirely. That single year can push you into a surcharge bracket for 12 full months, even though your actual income today is far lower. And most people just pay it, assuming a number from a government agency is set in stone. It is not. The form is called SSA 44. 1 page, no cost. You file it to notify the system that a life-changing event reduced your income, and the surcharge gets recalculated. Depending on your bracket, that can put anywhere from $70 to over $400 a month back in your pocket. People have paid that surcharge for a full year believing they were stuck. They were one piece of paper away from making it stop. Call Social Security and say this: my income has dropped significantly compared to 2024. I want to file Form SSA 44 for a life-changing event so my Medicare premium gets recalculated. That sentence opens the door. The number is 1-800-772-1213. The IRMAA Surcharge and Form SSA 44. This is the form I promised you at the very beginning. Some retirees don't pay the standard Medicare premium, they pay a higher one. It's an income-based surcharge called IRMAA, and it kicks in when annual income exceeds $109,000 for a single filer or $218,000 for a couple. Here's the trap. Medicare doesn't look at your current income to set that surcharge. It reaches back 2 years. Your 2026 surcharge is based on your 2024 tax return. This is critical for anyone who had an unusual income year in 2024. You sold a home, withdrew a portion of a retirement account, received a one-time payout, or lost a spouse and the financial picture shifted entirely. That single year can push you into a surcharge bracket for 12 full months, even though your actual income today is far lower. And most people just pay it, assuming a number from a government agency is set in stone. It is not. The form is called SSA 44. 1 page, no cost. You file it to notify the system that a life-changing event reduced your income, and the surcharge gets recalculated. Depending on your bracket, that can put anywhere from $70 to over $400 a month back in your pocket. People have paid that surcharge for a full year believing they were stuck. They were one piece of paper away from making it stop. Call Social Security and say this: my income has dropped significantly compared to 2024. I want to file Form SSA 44 for a life-changing event so my Medicare premium gets recalculated. That sentence opens the door. The number is 1-800-772-1213. Before we get to the action steps, one important warning. Because everything we just covered about senior benefits and government forms is precisely the bait that scammers love to use. Here's their playbook. A friendly voice calls with good news. There's a new benefit, an increase, money waiting for you. All you have to do is verify your Social Security number or pay a small processing fee to release it. Or the darker version. Your number has been suspended. There's a warrant out for your arrest. Press 1 immediately. And your phone may even display the real Social Security Administration number on the caller ID because they spoof it. Burn these into your memory. Real government agencies do not cold call you demanding your Social Security number. They never ask for payment in gift cards. And the annual cost of living adjustment to your benefits is automatic. No one needs to file anything to receive it. Anyone telling you otherwise is reaching for your wallet. If a call like that comes in, use this line. If this is legitimate, put it in writing and mail it to me. I'm hanging up and calling the agency myself. Then hang up. Report it to the Social Security Fraud Hotline at 1-800-269-0271 or online at reportfraud.ftc.gov. Action Checklist. Let's pull this into a list you can actually work through. Step 1. Pull out your most recent tax return and check whether federal tax is being withheld from your Social Security when your income says it shouldn't be. Step 2. Confirm that whoever prepares your taxes applied the new Senior Deduction, $6,000 for a single filer or $12,000 if you're both over 65. Step 3. Call Medicare at 1-800-633-4227 and ask about a Medicare Savings Program to cover your Part B premium. Step 4. Contact your county assessor's office about senior property tax relief and write down the application deadline. Step 5. If an unusual income year in 2024 raised your Medicare premium, file Form SSA 44 with Social Security at 1-800-772-1213 to have it recalculated. Quick recap. 1. The federal tax on your Social Security you may not owe. 2. The $6,000 senior deduction that runs out in 2028. 3. The Part B premium a savings program can cover in full. 4. The property tax relief your state offers but won't bring to your door. 5. The IRMAA surcharge that one free form can eliminate. Honest moment before you go. This is general information, not personal financial or tax advice, and I don't know your specific numbers. Every one of these programs has income thresholds and state-level rules that change. Before you act on any of it, verify your own situation with the relevant agency or a tax professional you trust. The phone numbers I gave you are the real ones. Use those, not the number showing up on someone else's caller ID. And do me one favor, don't just let this scroll by. Think of one person, your mom, the neighbor down the street, the friend from church who's been complaining about her Medicare bill for months, and send this directly to them. One of these 5 could put real money back in their pocket this year. That's worth 30 seconds of your time. I'll see you in the next one.